Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's October 4th. This will be our chart lesson for today. And real quickly, I wanted to show you the daily chart here. I've got a measured move target down here. I believe this is, well, I believe this is 42.55 or so, or 42.25 or so. Yeah, real close to 42.25. As you can see, this channel looks very valid because we're still bouncing off of that channel right there. We're still way in the oversold, but I believe we're trying to reach this target. So we could just keep kind of chopping lower until we hit that, or we could just break on through, hit it, and then reverse and still close inside that. So, but I believe that's probably the minimum target we're headed to. Maybe we'll get a bounce after that. This could be the center of a pattern. We could go higher, or we could go into a bigger sell-off. It's just really hard to say. I mean, this has been a fairly large sell-off from basically just under 4,600 to all the way down to, if we make almost 4,200, that's a 400 point correction, which is probably one of the bigger corrections we've had in a while. So we'll just have to see what's going to happen. But right now the trend is down. The bias is down. So it doesn't mean, one thing I'll tell you, in bear markets you'll get some very, very strong rallies, just like this day, like this right here. But that doesn't mean it's over, because you see, we, even as bullish as that looks, we quickly come back to just as strong, if not stronger, selling right a day or so later. So you will see some very strong rallies even in a bear market. So just be prepared for that. Even today, there were a few strong rallies. I mean, they didn't last long, and we really never bounced off the lows too much, but there were still some rallies that you have to be careful of. So anyway, we'll switch over to the intraday, the 2000 tick intraday chart, and go from there. And here's a look at that chart. You can see it was all downhill. We got a little close outside the blue channel here. We never were able to make a new low, and we really just started trading sideways. And honestly, I think this range just kind of opened up. You can see the lows moved up at this point right here, and the highs just moved about an equal distance, in my opinion, right in there. So, but this is the way I played it for most of the day. But before we actually get into talking about the chart, I wanted to discuss something. A trader sent me an email talking about 3 o'clock. Let me back up and start from a little bit sooner. The market used to close at 3:15, and then it would open back up at 3:30, and it would trade until 4 o'clock, I guess, and then it would close again and wouldn't open back up till 5. Well, now they've stopped that 3:15 halt, and the futures just trade straight on through to 4, and then it halts until 5 o'clock, and it starts back at 5. So right now the market's closed during that hour, and so I had made a small change on my chart where, since there was no 3:15 close, I was marking trades up to about 3 o'clock and then telling you probably not to trade after 3 o'clock. But a trader sent me something and pointed out a couple of things, and after I got to thinking about it, he's probably right. There's a lot of craziness that goes on right around 3 o'clock, because that's when the equity markets, that's when most of your stocks will close, and so a lot of futures traders will exit there automatically. It's people are used to being out by 3 o'clock, and I think most people are done trading by 3. And just that last hour, most days, not much happens. And just to give you an example, let's look at today here. Today, I mean, that's 3 o'clock right there, and then the rest of that's to 4. So there's no way to trade that. And so I've been pretty much marking trades up to 3. But this trader suggested I go back to 2 o'clock and continue with the way we used to do it. And honestly, I think you can trade up to 2:30, because it's just right at 3 when it starts to get kind of convoluted there. And let's just look today where it hits. It's usually when it hits right around the last minute, 2:59 or so, and you'll get all that sudden burst of a bunch of bars within just a minute or so. And he was saying that's normal every day, which it is, because a lot of people are going to exit and so forth. I still believe the 30th was, we had about double that amount of bars. I usually don't watch the chart, and if you just look at the chart, you don't see anything really different here right around that time. But if you look, if we just start where right before 3 o'clock, so let's just say that 14:59, it starts right in there, right before the last minute or so before the 3 o'clock witching hour, which is what I used to always call it, the witching hour at 3 o'clock. You wanted to be out by then. And actually, your broker used to would kick you out. I've checked with my broker, and now they don't kick you out till almost 4 o'clock. So you can stay in a trade, but it gets dangerous taking any new trades after. I'm going to say you can trade safely up till 2:30. Just don't take any new trades after that, because you can see the price action still pretty valid. And if I go back and look at previous days, it's pretty normal up until right around, it really starts right in here about 2:58, 2:59, and you can see it prints off a bunch of bars right into that right into that 3 o'clock hour. And no, like I said, normally I'm not watching the chart this time. That one day I just happened to be watching it, and I noticed how it started printing them really, really fast. But when I go back and look at it, there still were double the number of bars that day. I still think that because it was the last day of the month and the last day of the quarter, there was probably some squaring of the books and so forth, and there was probably some higher volume. But I tend to agree with this trader. I think we probably I think 2:30 is probably the better cutoff time, because there's some still. I mean, this thing's still acting pretty normal into 2:30 right there. I mean, even on into that, the bars are still forming about the same. It usually happens in that last couple of minutes of 3 o'clock where it just kind of gets squirrely. And you can see right in there is where it happened. And boom, you start getting all those bars. They didn't really move anywhere this time. That was in that big downtrend the other day. And so it was very noticeable the way it just started running down, and the bars were just printing just in a blink. So, but I tend to agree with him. I think he's probably right. We probably shouldn't mark trades up at 3 o'clock. We probably should call the cutoff somewhere between 2 and 2:30. I'm going to call it 2:30. I think that's a fair compromise, and a safe compromise. I think you're safe to trade up to 2:30. Just don't take any new trades after 2:30. That's my thoughts on it. I was going with 3 o'clock, but I believe he is correct. I think you're safe not to be in that, just in case, because it could be, you might forget. It might be one of those quarterly, end of the month, end of the quarter. You might even get caught at end of the year kind of deal, where things might really be crazy. So because there will be some squaring up of the books and all that stuff on those days and so forth. So just be aware of that. We'll go back to that change. You can see mine turns gray at 2:30 now, and I won't mark any trades after that point, and I don't think it'd be wise to take any new trades after that point unless it's right at the cutoff. And that way you're safe, because the last thing you want to do is get in a trade. I mean, if you look, the price action still works, but it just prints so fast, and and if suddenly there was some large institution that decides they want to exit a large trade at that point at time and day, you don't want to get caught in that, because you could get burned really badly and really quickly, because I mean it moves so fast. I want to say it was, I can't remember, I pulled the tape on it, measured, it was like 20 bars within just like a minute and a half. And normally, looking at most normal days, it looked like it's 6 to 8 bars. And on that day, it was like 20 bars within a minute and a half. And so it was real obvious with me sitting there watching the chart. And again, if I wasn't watching the chart, I may not have even noticed it, because if you just look here, nothing looks really out of the ordinary, just kind of going sideways. But those bars all printed in just a minute or so right there. So anyway, I've drug this out probably further than I should, but I tend to agree with that trader. I think he's correct that we probably should, I should make that people aware, because a lot of people aren't aware of all this stuff. They start getting into trading and they don't understand everything that's going on. And the last thing I want to do is mislead somebody into taking a trade late in the day when they probably shouldn't. So make sure you understand that. The reason the the white is the regular trading day, but I have it cut off to gray here. You can trade some of this gray from about 7 o'clock on. I don't have it turn white until 8:30 though, just so it gives me a visualization of when it's turning to the 8:30, when the 8:30 market's opening, or the regular 8:30 the stocks open up, or whatever. So that's generally the times the pits used to open, and most traders have been old timers are still going to follow those old rules and old trading times. And I never trade that late in the day. I can't remember the last time I took a trade after 1 o'clock. It's just very rare, if ever. So I like to do my trading in the morning and get done, and I use the afternoon to work on this stuff and the website and answer emails and all that stuff. But anyway, let's back out and talk about the trades. There's one or two things I wanted to talk about down here when we get to them. But let's back out. I mean, you can see it's clearly a downtrend. We had an overshoot here, and I think this confused a lot of people. A lot of people drug their chart all the way down, and then when we bounced short, we bounced short 3 other times. If you mark it down here, well, the odds are is we bounced off the trend channel line these other times, and you had an overshoot here, and that led to a break. And it really didn't lead to a reversal. We just kept going sideways. The sideways stuff expanded a little bit, but that's about the most you can say for it. So another very bearish down type of day. Although from 10 o'clock on, I mean, really we bottomed out about 10:30, and from there on it was just sideways. We really traded within that high and low move right there the rest of the day, except right here and maybe right here we failed above that. So this is just a range. It's just all there is to it, and you can see that. And that's really how I'm calling it for now, although I believe that it moved up a little later in the day to right about here, and this moved up a little bit over here too. But I'm going to leave it like I originally had it, and that's pretty much your range right there. And I'd treat these as both as failed breakouts, and I would have just moved my support up a little bit down here. But anyway, that's how I see it. Let's back out or zoom in here and go through the trades. And 7 o'clock comes right in here as we're bouncing off that trend line. Signal bar is not very good. You could have looked at that maybe as a high or low, but the signal bar is not very good. But there's actually a failed second entry short here too. There's a couple of ways you could have looked at it. You could have treated that like a double bottom right here and said first entry, second entry. But this turns out to be an engulfing bar. So if it is, you have to move your stop down here and wait for this to close. And then you would have got stopped out anyway. So really, to me, there's your double bottom. And then you get your first entry. It tries to go higher. It turns back down. And when it breaks higher, there's a failed second entry long there. But better than that, there's also a new high first entry, second entry. It's a little bit congestive looking, but with the trap, and it's really kind of like a double trap. It trapped people if you took that first move. I don't know if that fooled a lot of people, because really that just looks like one leg up and a first entry. It doesn't look like a failure at that point, and it's not off the EMA either, which you really want it to be off the EMA like this. So I believe this was the better place to enter. So when it tried to go lower twice there and gave you a second entry long on a failure, I like that going long there. And you can see, boom, the smart traders decide to come in, and you're working down, and you get another second entry right here, but your signal bar is no good. It is at the EMA. There is a little channel working down there, and there's a break and a new low, but your signal bar is not good enough. So, and then by the time this one triggers, it's not really a high or low or anything like that. So you just have to kind of miss that one. But then suddenly you get two legs back and you get a second entry right here. I'm a little leery of this one because it shot through the EMA so quickly. It didn't reach the highs up here twice in a row. That makes this a very suspect move here. If we'd have went on to the highs here, it would have shown a little more momentum. But the fact that it came up short, actually it came up short right in here, then it gets wider and then wider. So eventually you're going to get a break. So that makes this a little suspect being below the EMA. It's still a second entry long at the key entry point though. If you took it, it works. You're better to wait on this higher low, but by then you don't get a signal bar. You've got true congestion, so there's no entry there. And guess what? It turns out to be a trap, although it's not a short you want to take, unfortunately. It drops on down, and then we're just stuck in this little range. And I don't see any trades in that range. You don't really want to be going long yet. There's no long. You could argue maybe there's a long setup there, but I'd wait on a higher low, which is here. Now you're right back into the resistance. There's just no setups in there. And it does break out, but it doesn't give you a signal bar there. It gives you a lower high here, right back into the support. No signal bar. So it's just no good entries here. And so if you didn't see anything in here, guess what? There wasn't much. This one was really tempting, but the signal bar is just not quite good enough. It's very dangerous trying to short that. So, and it never breaks higher here, and then we're off to the races again. So it just doesn't give you anything. Finally, you get a little second entry short right here at the key entry point. It actually breaks higher and turns down, so the second entry triggers one tick below that. It looks a little congestive. But as strong as this has been, and being at the key entry point and the second entry short with that big bearish bar, I'm probably going to take that trade. That's been the best trade all morning, really, other than the one long here. That's really, so if you don't take that one, then you're just, there's another one, a lower high here off the key entry point, but again, the signal bar is no good, and now you're just getting so far away from the EMA. But there's this red channel here too. We actually work back right here. This is not a second entry or anything. It looks like we get a close outside here. It's real close, and then it opens outside and trades back up. But when it turns down at that key entry point, the first real correction we've had, and a nice signal bar with a little room back to here, I think that trade's worth taking. You could argue for it to be green, but it looks like there's a close outside to me there, and you could actually, this actually looks like it ought to be just a tad higher right there, like so, and that gives you a sure close and then another possible close outside, and then right off that key entry point. I like that entry. You're better to wait on this lower high, but it doesn't set up. The signal bar is too bullish, and you don't get a reversal pattern, and I mean the market's just really weak right now. So and this is where it got a little confusing for a few people. I believe the low of the channel was here and not down here. And this is the way I originally had it drawn. I looked at moving it down here, but it just didn't look right. All this midline stuff looks pretty good right through here now, but when you move it down, it didn't look right to me. So this is the way I played it. And let me make this a little bigger. We want to talk about this trade because I got it. Somebody asked about it in the forum, but they asked about a second entry short right here. Why this failed? Because it does look like a first entry and a second entry. But if you're paying attention, you got a new low, you're working up, you get a first entry, and then you make a equal low, which is still a correction because it's not going lower anymore, and it actually trades higher and breaks higher. So when prices turn back down, there's your second entry trigger right there, not over here. This is a third entry. This doesn't qualify for an entry. If it did, it worked. But on this third entry, you've already bounced off the key entry point again, in my opinion, and then made a higher low. So there's some reason prices are bouncing right along that trend line right there. And notice that as the day progresses, that's where we turned again and made the low of the day. So I'm rather confident that's the trend channel line. And you can see when we came back here to the midline. We're kind of playing that on both sides. You're finding support and resistance on both sides of it. Again, right in here, kind of the same thing. So I'm pretty confident that's your trend channel line. You don't ever want to go short right into that. So once we got this overshoot here, plus you've already got a close of this and a new low. The one key is you've got the red channel that you've just now got to close outside, and so yeah, you would expect prices to try to make a new low, but the bigger channel, this bigger blue channel, is taking precedence, and it has to come way down here to make the new low because it can't get through that trend channel line. So that's what's going on there, in my opinion. I believe the other trader had this right off their key entry point too, both of these entries, and I don't think that's correct. I mean, you can see how I drew mine. Starts off the high. Actually, it's probably maybe a little bit less steep than that. It's probably more like that right there. I'm just trying to catch those blue closes right through there, and you catch your touch right there. And you might have even had a little bit of a close outside there, but you could definitely get one there. But regardless, you expect prices to try to make a new low, but they can't do it because of the trend channel line. So hopefully that's clear. Plus, this is not a second entry. This is just a first entry short. So that's a couple of important points that you can't miss there. I didn't mean to do that, but all right, we've already seen it, so I just wanted to get that off. Let me put that back on there. I'm sorry. And there it is. But I think we've clearly got, you can see I drew it there, and I think we clearly got a break here and attempted a new low, but we couldn't get through the trend channel. So we bounce a little bit, suck in some longs, and then they run it down hard back into the trend channel. Then it bounces and it goes just like you'd expect. Once you come off the lows, you're usually going back to the midline. The only reason we probably try to go lower here is we're trying to make a new low on this red channel or pink channel. But we bounce there regardless. You actually get a first entry, second entry, no setup there. But then you get a close outside, and you try to go higher there. You're way away from the EMA, and that's actually a first entry, second entry too, and it's kind of got that same deal. It went lower, then it turns back higher, makes a matching low. So when it breaks lower there, that's a second entry. I like that one. I really thought we'd go lower there because you've already got your break and new high and a couple attempts to go higher, but it still pushes up for one more leg up. At that point, I'm a little leery about going short there because we're still above the EMA. But finally, we break higher and turn down and make this real bearish bar on a lower high. I like going short there too. You actually get a second entry short here, but your signal bar is horrible. So I think you just have to ride that one out. You get a lower high here. Again, signal bar is terrible. There is a failed second entry long, but that's not really how we want one to set up. You could say we're coming back to test the midline there and count that as a failure because this is a double top, first entry, second entry. But you're going long right into the lows. Yeah, there's a little bit of room back down here. I don't think I would risk it. You could probably argue for it to be green, but I don't, I'm not going to risk that trade personally. So we bounce right off the trend channel line again. You get a first entry, you push through the EMA, you pull back, you get a second entry. And we did have an overshoot here as well. So this is the first break. So you got to be real careful on this trying to pick these lows. But now you got a new low in pace for the yellow channel, the pink channel, and we're more than overdue to go back to at least the midline on the big blue channel. So you may risk that trade. I'll be honest, both of those trades, I would skip them. But if you're wanting to be aggressive, that's the two you'd probably want to take. So a lot of times you can get a really big runner off one like that. And you see it does run pretty well, but it comes back and takes out all the runners first. So, but you get a little close, a couple of little closes outside here before it moves on up. And you actually get a second entry here that you might have taken since it bounced off the EMA if you had a decent signal bar, which you don't. Let me make this a little bigger. I'm sorry. And you make that second entry long. Technically, that's not a failure, but that's 3 attempts to go higher, and you've already had a close outside and a new high. You're way away from the EMA. You're probably going to at least pull back and test the midline, even if we're going higher from here. And this turns out to be a pretty good trade. There's a lower high here, too congested, terrible signal bar, and you don't get the reversal pattern. If you wait a minute, you do get a second entry here, but on my chart, again, this is your signal bar. It's too bullish. Then you got an inside bar. It's too bullish, and you can't use any of those for a signal bar, even though there's second entry triggers right there. So again, just not a very good setup. And who knows what's going on down here? It's kind of hard to say. You've had a break in a new low. There's no reversal pattern. There's no reason to go short. There is another second entry here, but again, the signal bar is no good. It does run down to a new low and bounces. Again, no setup, and I just don't see anything in there that I would risk. The only place that even looks semi-close to having a lower high is right here, and you got to go short right into that EMA, and we've been bouncing. You've had a lot of stems here, and if you take that trade, I'm pretty sure you end up with I think it's a 4-tick failure. Yep, it's exactly 5 ticks, and you're going to need 6. So the odds are you don't get out there and you get burned. And we go higher. You may take this on a failed breakout, being that far away from the EMA. Same thing here. This is also a first entry, second entry. Again, I don't think you want to buy any of these bounces. There is a higher low here. Again, it's right. It closes underneath the EMA, and we did make a lower low than the last couple of swings down. So I just think it's too risky. The overall bias is down. Another lower high here, but that looks a little too congested to me. Everything is inside that big bar right there. 1, 2, 3, 4. Not a very good setup. So I just don't see anything in here till you finally come back here and make a lower high. Actually, technically it's not a lower high. It's just another test of that double top right there, and you make another double top, and you're a long way away from the EMA. So again, you might take it, but I just think it's too aggressive. You're a ways from the EMA. But here you've even got a channel working up that's still in play, which actually you probably could argue that same argument on these others. I just think all those are aggressive. And we're just going sideways here. The bias is down, so if you're going to enter, those are the ones to enter. Stay away from these probably. And of course, we finally break above that. There is a lower high here. I didn't mark that one, but you could take that trade right there. I meant to come back and look at that again, but you could take that trade, and there's actually a failure here that you could take that as well. The only problem with this one is it looked a little congestive. So, I mean, even that one you could argue for it to be green. And you could have ridden that all the way down. That's probably the better trade of the afternoon. But what scared me away is even though it's a failure, it's congested right there. So... and that got us into the 230, which again, that's where we're going to have our cutoff these days at 230. So thanks to that trader for pointing that out, because I think that's an important piece. And I didn't read his email very closely at first, and I wrote him back and told him I thought he was wrong. But after I went back and reread his email, and then went back and looked at some of the previous days and how prices tend to react there, I think he's 100% correct that you want to be out before 3 o'clock. So, I think 230 is a good safe spot to compromise rather than going all the way back to 2 o'clock at this point. So, and that could change over time as the markets, you just kind of keep eye on. It may get to the point where people don't start exiting till 3:30 with time, but I just think Old old habits die hard, and people are used to being out by 3, and most people want to be out by 3. And so, and again, a lot of the stocks in the equity markets close around that time. So I think that has a lot to do with it too. So anyway, it's 30 minutes worth, much more than I wanted today, but a lot to talk about. So I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.